one of the things that made us successful previous to starting our own business was understanding the power of referrals, not just from former clients, but when you don't have any former clients, you need to get referrals from centers of influence.
You and your partner, Zach, top 2 agents nationally at Liberty Mutual. You founded GNN. GNN became not only one of the fastest growing agencies in the country, but you were also one of the fastest growing businesses on the Inc. 5000.
We had no idea what we were doing, but we were throwing everything against the wall. We weren't taking any money at the time, so the $10,000 purchase of 100 bobbleheads was a big deal. We got 2 reactions. It was either, this is so weird, but let's meet because thank you, and this is the coolest gift I've ever got.
75% closing ratio, 96% retention rate, 7% of all new home sales in Massachusetts. Pretty incredible results for a bobblehead campaign on a $10,000 budget.
If people trust you and your word is strong and you feel like you can provide a tremendous amount of value for people that they care about, that's the game.
Matt, look, we've been talking about this for a while. Trying to schedule this in between getting like 30 inches of snow was a challenge. But now that we're on here, let's kick this off. How did you get into this? How did you get into insurance just in general?
The entry into the industry originally came from a really funny place. I was a baseball player in college, or at least attempted. I played a Division I catcher up at UVM, and I knew that heading into my senior year, I really wanted to have like my foot in the door with a large company. I kind of knew sales was something I was interested in, but after that, I had really no idea. So I figured like if I can get into an internship my senior year, get my foot in the door, maybe it creates an opportunity to work for that company or a company like it afterwards. And so there was a Fortune 100 company that had an office really close by. And I said, yeah, I'll go in there. I'll do a little interview and see if they're looking for interns. They were. I somehow convinced them to hire me. They were paying $19 an hour, which was phenomenal back then. And at the same time, and I don't know if I should share this, but UVM also gave me 6 credits for the internship. And so neither group really knew about the other, but it worked out great. I walked in, high-fiving and feeling like this is a great opportunity. The day though that I was hired and I actually started working there and started getting a paycheck, the manager who hired me actually resigned or got fired. No one really knows. I don't think to today. And so like, I'm sitting there like, what do I do? There's no manager. There's no replacement. There's just a couple sales reps in here. Where do I go from here? And ultimately, I did some stuff. I learned a little bit about the industry. I worked on a little bit of sales campaigns. But basically, like the sales reps came to my baseball games for the next like 3 months, and I, brought coffee and we had some fun. And I left that internship thinking like, wow, sales is for me. This is an awesome. Insurance is phenomenal. This insurance company, like, I can't believe they paid me, and I got to do basically whatever I wanted. It probably created the ignorance needed to actually feel like, yeah, this is a great business. And frankly, looking back, I'm so grateful I took that step, because insurance is one of those industries that like, I think someone like myself wouldn't have naturally gone into unless I had some ties. And so finding myself in the business, in the industry, and being able to grow within it in so many different ways, like, oh, I'm so grateful that internship happened.
I was laughing specifically because mine's not very much different. I was an intern at Northwestern Mutual in college and then went full-time after that. And for me, like where I grew up, I didn't realize you could do sales as a career. So for me, when I got in there, I'm like, oh, this is interesting. I knew I was a finance major. I was never going to cut it in corporate finance or investment banking or PE. Like I didn't have those chops. So when I got into there, again, like you said, what stuck out was like, I was just naive enough to be like, oh, okay, this actually makes total sense. I didn't realize this world existed. And now I'm super grateful that I went that path. But I just got lucky to get the internship at the 25th hour.
Yeah, I remember being like second or third grade, and you do that test that tells you what you should be when you grow up. And, Jimmy on my right's a firefighter, like Suzanne on my left is like an executive, and someone's a, aircraft carrier pilot or something. And, and then I got sales, salesman. And I remember going home just like teary eyed, second, third grade, like, I kind of looked at salesmen as like car salesman or like, selling doorknobs or knives or something. And I was just so upset because I was like, that's my life. Right. And growing up, and then I grew up and I'm like, wow, you're always selling. Whether you're a producer, regardless of industry, you're in service relationship, whether you're an executive or you own your own business, you're selling at all times. And so I'm grateful that was the calling card early on. Came back around to it in college.
I find it so interesting. And I think anybody that starts to do sales at a really high level, especially if they're selling big ticket accounts and things like that, you realize that all the stereotypes of sales is the exact opposite. And it's the people that really could be consultants in that industry are by far the best because they're getting people to think about things in a way that they didn't realize before. So you're just solving really big problems. And the close is a natural byproduct of that. But that doesn't make a good movie on what it is. But I totally agree. It's very different. And I screwed it up bad early because I tried to be like Boiler Room, Wolf of Wall, anything you could think of. Like that's how I tried and like got nowhere until I flipped it.
The tough thing is that the word sales is like, it defines the role internally at a company, but it shouldn't be the external, word that defines the person and actually drives their behavior with the role. It's like, because you're not really trying to sell anyone on anything. You want to just provide and position your product the right way for somebody who needs it the most. And then it's not even a sale. It just happens.
Well, I tell you what's interesting too is like I look at your career and it's funny how you say like you kind of fell into this, but clearly it was a really good fit. You and your partner Zach, top 2 agents nationally at Liberty Mutual, so that started to work right out of the gate. You founded GNN. GNN became not only one of the fastest growing agencies in the country, but you were also one of the fastest growing businesses on the Inc. 5000. And then you sold GNN to the Hilb Group, and you sold to Hilb at a really interesting time. Like that's when they were on their rise as well. And I know you guys had led for a little bit all the personal lines division for Hilb. So had major success within this. One of the things along that rise, one of the things that I thought was super interesting, and we had talked about it before, but then doing my own research is this bobblehead campaign. I would love to get into the weeds on. So when I say that, what is kind of like the first thought that you think of when I say the bobblehead campaign?
It's funny. We didn't really have any intention for anyone else to know about it. It wasn't like a branding move. It was more of like a call, something to get the recipients of the bobbleheads interested in meeting with us. We were a year into growing the business. We had no idea what we were doing, but we were throwing everything against the wall. And we had recently seen an Office episode of Dwight Schrute and his bobblehead. And we weren't taking any money at the time. So, the $10,000 purchase of 100 bobbleheads was a big deal. But we were having some success with realtors and mortgage brokers and attorneys and, engaging with them and getting referrals and creating a network, opportunity there. We just decided to go all in that space. And so we researched and found the top producers in those different, industries of mortgage and real estate and attorney. And we made them all into bobbleheads unbeknownst to them. So custom to them. And then we, hand delivered some of them and we mailed out a lot of them, basically nice packaging, branded to them, what it means to be part of the bobblehead family and community. And we got 2 reactions. It was either, this is so weird, but let's meet because, thank you. And this is the coolest gift I've ever got. I'm going to put it up. And, we even had people who received it, their kids had broken it, and they reached back out like, I'm so sad. Like, is there any way I can get another one? And so we realized quickly, like, that was an interesting way to get in the door with from a network effect perspective and create relationships right off the bat with people that probably would have taken a lot longer to say yes to meet with. And it just generated a lot of momentum. And then we just kept on doing it. So over the course of, I don't know, call it 7 or 8, 9 years, we made 1,300 bobbleheads, and there's probably not a mortgage broker, realtor in Massachusetts who, was a heavy producer who didn't have one. It then spawned into, hey, this brand is working. We started consulting across the industry and speaking on different stages, different events, and started a consulting firm called Bobble On. It just naturally morphed into vlogging and video series and podcasting and all the other things, and kind of drove the brand internally within the industry, which we had never any intent of doing. To today, it really created a tremendous amount of relationships and partnerships and trusted friendships that wouldn't have had otherwise. So it was a good decision.
Let's break this one down. What As I understand it, you guys were still kind of at that we need to speak to anybody that's got a pulse phase of the business. I'm saying that because that's very much what it was like for me when I was starting. You pivoted pretty early. Was it that you just had a couple of these? Now, of course, this is talking with mortgage originators and loan officers, a pretty common practice. But why was it like? What was kind of some of those early points where like, you know what, we got to go all in on this, because that's a very scary move to go from friends, family, just pushing referrals as much as you can in that world versus we're just focusing on home buyers specifically, not necessarily just homeowners, but home buyers.
Yeah. At the time, it wasn't as much of a thing, like working with home buyers through their trusted mortgage and loan and real estate agents. Like now, I think everyone around the country does it. It makes sense. 15, 20 years ago, like it wasn't as much of a thing, at least going all in on it. For us, what made us successful, one of the things that made us successful previous to starting our own business was understanding the power of referrals, not just from former clients, but when you don't have any former clients, you need to get referrals from centers of influence. And so when we started our business, we had a lot of centers of influence that were just across, the full gamut, from all different industries, from different relationships. Not all leads are created equal. Not all referrals are created equal. So about a year in, we started to assess, hey, we get this number of referrals and leads and opportunities. What closes? We feel like these are better than these, but like, let's actually look at the numbers and the data. And so we did an assessment, and it was very clear when we got introduced to people who were buying property, they needed what we had to offer. It was time-based. The closing ratio was much higher. The speed from open to close was a lot quicker. It just made a lot of sense. And so there's a big enough industry here. We only do X number of closings or, clients that are closing a year. We can cross almost every time to other lines of business. Let's just try it. Let's go all in on it. And so I think it was enough proof in the relationships that we had. We just needed more of them. So this was like a fun marketing event early on that sort of spawned into bigger things. I think that's really what triggered it.
I love that. And so I want to talk about that kind of like that first push. Before we go there, you hit on something that centers of influence. Now I learned about centers of influence when I was a captive, and I was kind of shocked when I left that world, especially in like the insured tech companies that I was at. Most people didn't understand the concept of a COI or a center of influence. And it works in any industry out there, period. It works, I think, especially good for some. But can you walk through what is a center of influence? What's your process for meeting with centers of influence? How do you find more of them? What does that look like?
I like to start from the end. So we had helped probably 70 or 80 insurance agencies deeper into our career as agency owners, implement systems that really help them both from an operational standpoint and also some marketing too. And we all started starting with goals. A lot of people, don't write down their goals and have specific goals, and then backing into how who is going to be that target client that you're going to grow with to hit your goals. And I think identifying that target profile, the profile of that target client is extremely important, because then you can figure out who in their world, whether it's a vendor, a referral partner of theirs, a supplier, a key influential, strategic partner, who in their world could we actually network with that could have the influence and trust of our target client enough so that when they make the introduction, it's strong, it's powerful. We already have the vetted trust and the authority is already there. And so that works in any industry. You figure out your target client, you figure out who's going to be most influential in their world, right? And then you network and go all in on that space. So like for a while, we were more in the realtor mortgage space and the home buying space than we were insurance agents. And like today, when we're helping agencies, and we'll get to this later, but helping insurance agencies actually successfully sell their business, anyone who's influential in their world, right? From consultants to vendors to tech software platforms to carriers to anyone who's influential in their space, if they know what we do and how we help and what we do, what we do helps them, those are the people we want to connect with and sort of share our story, and then try to invest in those relationships. I think that's the key for the centers of influence, is that you've got to kind of lead with a give first mentality, but not to your target client, to their trusted people.
I 100% agree. And I have found exactly what you said, just kind of that give first, where, when we were focusing on more like early stage insurtechs, we would work with we'd had connections with all the VCs. And when a new insurtech would pop up, it was a win-win because the insurtech wanted to connect with those VCs. We'd be able to shoot over a pitch deck. If they liked it, great, we make the introduction. But we're giving those. So then when something, we're top of mind when something that's a good fit, if one of their portfolio companies has a challenge, then we get pulled in there. And we do that now with PEs, because as we work with some of more of the larger insurtechs, and then the carrier side as well, it's who supports that channel that it's a mutually beneficial relationship. And then you're just making something, again, like as simple as an introduction goes a long way for all parties involved, even if it's like you can't be focused on like what you get out of it in that moment, because they're long-term relationships. Have you found that to be the same?
Totally. Yeah. Yeah. You play the long game. I think early on in any business, it's harder to see that. It's harder to understand. And sometimes you can't even think long game. You have to think short sprints and just do whatever it takes. Eventually, those who I found win big long term transition to long term gains with long term people, and investing in relationships of people you actually enjoy working with, you can get along with, and then you're just the person that they refer when they hear the need that you can offer, that you can solve. That's, I mean, I don't want to oversimplify it, but there's obviously a lot more relationship building. But if people trust you and your word is strong, and they feel like you can, what you have to offer, can provide a tremendous amount of value for people that they care about. It's like, that's the game.
So, you talked about this as well on building, like very big on process building. And what did that process look like? Okay, you got a bobblehead in, send this thing out. Where does it go from there?
Yeah. So I think a lot of discussions over the years when it comes to written process, focus on like service processes and sales quoting processes, binding processes, fulfillment, processing, post sale, service, and claims. But no one ever really talks about the importance of a written process that you follow and that you're consistent with on the networking side. Maybe on marketing and social media and some lead gen stuff, but like on networking, it's kind of like people think of it as like a relationship thing, and you get to know as many people and they like you. But I think to be able to scale that and do it really, really well, you have a systematic process that you follow. And so once first it was identification of who we wanted to actually send a bobblehead to. Eventually it morphed into any time we received a referral from a new potential COI, a new potential, loan officer, realtor. That very first referral, we'd make them into a bobblehead, and we had a process to deliver that. It was a thank you, regardless of whether the client closed or not. It was a thank you and to reward that behavior that we cared about. But backing up, like once they received the bobblehead, there was a follow-up, conversation. Obviously, like we would reach out, hey, did you get it? Where is it now? And and then we'd ask for the opportunity to meet them, and we'd sit down, and then we had a written process to follow those meetings. And I've talked about this for years in other spaces, but what questions we were going to ask and lead with to make sure that we have the amount of data to be able to pull from later on to decide like this is what success looks to them. This is how we can provide value to them long term. And you can't get that unless you're asking questions the whole time. So then there'll be follow-up sequences after that, touch points, text messages, calls, future coffees, like just, and then, obviously sending books and other things that really meant a lot to them. If they were if someone you met with shared that they needed help with goal setting and they didn't have goals or something like that, but they've been successful, despite it. We'd get them a book on goal setting, and maybe it's something that worked really well for us. We helped our referral partners with social media and lead generation. We helped them with team building exercises and core value creation. We helped them with weekly structured meetings and goal setting, all the things that make a business strong. and we invested in those relationships. And so all that came from a written process that we thought through what's the most effective way to create a relationship that's going to feed and receive from us for a long time.
I love all of that. One of the most interesting things about that is all of that holds up today. And I'd be curious if you're seeing the same thing. And I would make the argument too that scales all the way up. Doesn't matter how big of the company it is. It's just different, right? You're sending it to maybe a couple of people instead of one person. But why I was so interested in this one in particular is I think with how much AI is automating communication right now, and people are getting bogged down. Like, I don't check. I mean, my phone's on do not disturb all day. Fortunately, I've got an assistant that goes through all of my email because the spam email's out of control. Um, but these types of things are the ones that are standing out. You do a bobblehead with, I bet that same exact campaign would still work today. I'd be curious to get your opinion on that.
No, I hope you're right, because it may be coming back. It's just funny that you asked that question earlier about bobbleheads, because it's something like for years I didn't think about. And then, most recently, we wanted to do something special for our former clients. And thinking through a lot of different options, something that's custom to them, something that's special. These are agency owners who had hired us to help them sell their business as a sell-side advisor. And so we spent a lot of time with them, invested, a lot of effort, and created a really strong relationship. So you can't just get them a tchotchke. You can get them a closing gift, which, hopefully is custom and thoughtful, but wanted to say something that's like really, being thankful, and we're thinking of you and you matter to us. And whether or not you can ever refer us in the future, like, that doesn't matter. But we want you to know that we're thinking of you, and this is a token of our appreciation. So we ended up deciding to bring the bobblehead campaign back. But yeah, we just produced 63 this week. They're all going to be packaged together, accompanied by a little like speaker and that's branded, and maybe a little video brochure, with a quick little video, customized to them. And I think that's something that it worked in the past, and I think it's going to work again. Just to say thank you in a really interesting, creative way. I mean, as a recipient of that, if I open that box, I'm never going to forget it.
I personally agree with that. And I'm actually super curious to hear the feedback that you get from that. Because again, I think like you have to stand out right now. It's like it's too easy. Like the cost to create super quality content, the cost to create super high quality emails, everything it's low across the board for absolutely everybody. It's pretty much free for anybody. So like you have to do something that's going to stand out, because most people, I think, this is just my personal opinion, are going to take the path of least resistance, and they're not going to put that time and effort and energy into doing that. And they're probably not going to put the time and energy and effort it takes to create their ideal customer profile, like you said. But I think if you do those things, I don't care what industry you're in, but I know in this industry it works very well. Like you're just going to stand out for sure.
I mean, a lot of it also relates to the what your product or service is, and in our particular case, like, it's a really big decision to sell your business. It's a huge impact, both financially, emotionally. It is new legacies for a lot of people. There's a lot of identity connection there. There's a lot of family connection. There's a lot of small businesses across the country that have third, fourth generation. There's a lot there. And, I think you need to do stuff that does stand out, and also rings true to kind of who you are and how you operate. And, yeah, so, a simple email and a phone call, people get hounded every day, as you said, text, emails, and phone calls all day long. I've just sort of become desensitized to it. It doesn't. It's hard for me to react to anything if someone's reaching out that way. So I think you do have to put in that extra 5%, 10% that no one else is.
100% agree. And if that's not enough motivation, some of the results that I've seen, I'd be curious to hear if there's anything else that you want to add or whatever that might be. 100 plus referral partners sending 500 warm leads per month, 75% closing ratio, 96% retention rate, over 10,000 clients writing 125 to 150,000 in new premium every week, and 7% of all new home sales in Massachusetts. Pretty incredible results for a bobblehead campaign on a $10,000 budget, going all in quickly. That's incredible.
Yeah. Well, thanks. Those are numbers that like blast from the past numbers. I haven't thought about those figures in a while, but I like the fact that you brought them up because it means they're out there still, and it's something we were proud of, for a long time. The ability to go all in on your niche, and what that can actually grow to is it was pretty cool to see and be part of.
Well, so let's talk about like you talked on it briefly on what you're doing now, and I'm curious to get your you see a lot of transactions, right? You see the valuations, you see the ones that are get really high valuations, you see the ones that don't get as high valuations. How are the top performers positioning themselves right now? What are the top performers doing that the average is not? And how would you position yourself right now if you're an agent, if you were still back in there, you're about to make this bobblehead decision 2 years into the business, how would you position yourself right now to be in this top performers list?
Yeah. So, I mean, from a lens of creating the most amount of asset value for your agency when and if you decide to transact and sell your business, because that's a huge when and a huge if. A lot of people don't have the aspiration to sell their business, and totally cool. A lot of people want to transition that to the next generation. Awesome. I love that. Some want to move to their employees. For those who don't have an intention of being in the industry forever and or transitioning internally or perpetuating to family members, and they do want to look for an outside, partnership, whether it's private equity backed or publicly traded companies or strategic or someone regional or bank or local or a competitor. It doesn't matter. If they ever want to partner externally, there are a few factors that drive value. And as a agency owner growing the business, it's hard to say like, hey, you should pivot hard on your book of business. Although your book of business does drive value, like if you look at three agencies next to one another, one offers non-standard personal lines auto, and they're flat. They're not going to get, in terms of growth, they're not going to get anywhere near the value that an agency that's got a good 50-50 personal lines, commercial lines, vanilla, mix that's growing at 5 or 7%. And that agency is not going to get the same value that a mid-market commercial agency growing at 20% year over year is going to get. So like, it's hard though to say to somebody, hey, if you're doing well and you're growing right now in whatever book of business niche you're growing, you should pivot because you're going to get a slightly higher multiple. That's silly. Like whatever's working in terms of your growth strategy, keep doing it because pace of growth and scale matter way more than your book of business makeup. I think that those two factors, like the size of your agency and the pace of growth that you're growing at, they matter a ton. And a buyer wants to buy a business and partner with you if they know you're going to continue to, they have a really high degree of confidence that you're going to continue to grow post close. They don't want to buy an asset that's just going to, be stagnant or shrink. So, whether that means acquiring smaller agencies and just growing through inorganic means along with your growth strategy, whether that means hiring outside producers, and growing through maybe a less profitable means of growth, but still a really good organic growth, or beefing up your inside sales team and, doing a really good job generating opportunities and driving them to the house. That in combination with an inorganic strategy, that's going to drive the most amount of value for an agency. More than anything else. And I think that I would say to my own self, 15 years ago, continue to do what's working in terms of your growth strategy. And just really be mindful of your pace of growth and your scale and your leadership team. Agencies that are, this is no different in any industry, but agencies specifically, I think there's a lot of them out there where the principal, whether it's first generation or third or fourth, wears a lot of hats. They're the producer. They're also, the main producer. They're also, head of service and, carrier relationships and everything. And that asset, if you just look at it individually, is not as safe from a buyer's perspective than an agency that has a full leadership team, 3, 4, 5 people that wear different hats and are responsible for different things. Because if that business owner principal is removed from the equation, whether they leave a year after a sale, 3 years, 5 years, knowing that the business is in good hands and is being shepherded by a team that's been historically really productive and successful at doing so is extremely valuable. So I think that's one area where agency owners can say, all right, I'm going to grow as fast as I can. I'm going to try to, inorganic, organic producers inside, et cetera. But I'm also going to build out my leadership team because that's a valuable thing. Any buyer of any business wants really good talent. I don't care. We're entering in this huge AI phase, and people are talking about disruption and displacement of jobs, et cetera. So at the end of the day, you need good talent. You need people who are going to deliver results and are goal oriented and have good moral and ethics. And buying a business that have those people is so much more valuable than a business that's just operating on, high margin with no one really responsible. Long-winded way of saying that scale, pace of growth, and leadership matters.
I mean, is it fair to boil that down to predictability? Like they need to be confident that they're like that if you've got a 3-5 year forecast, that it's going to be fairly predictable you're going to hit that based off of the infrastructure that you've laid out. It doesn't matter if I think you also brought up a great example of, okay, let's say you're writing non-standard. Yes, right? But it's also probably an example of you're going to where people are not going. And if you've got a better machine and mousetrap to write non-standard business we all know non-standard business, oftentimes non-standard can churn every 30 to 60 days. But if you're able to keep that up on there a month longer because of the systems that you have in place, somebody's going to be really interested in that. Could be a non-standard carrier, but that predictability piece is what it feels like it comes down to. But I don't want to make an assumption or put words in your mouth.
Yeah, predictability matters, more than anything. And so if you have historical results that are strong, you've got a leadership team that's been with you for a while, you've got you're growing above average pace. You've got some decent scale. It doesn't matter what niche. I'd rather that with a non-standard, and we have clients that are non-standard agencies that are predictable, that have great margins, that have a sticky clientele, that have scale and that have a lot of locations. And they're going to garner way more from a value perspective than, a vanilla agency that's stale and not growing at all and, hit plateaus years ago. I don't think book of business or makeup should be the main focus for anyone who's growing an agency. If it's working well, you should just double down on it.
I bet a lot of people are pretty happy to hear that because it feels like it's easy. I mean, even like in the conversation that you and I had before this, I'm even saying it's like, man, if I was doing this today, I would just go for middle market commercial. And your exact words were, it's easier said than done. And you're right. Making that pivot's hard.
Yeah, if you could wave a magic wand and say, hey, I can do anything in the world, I'm going to be successful at it. What should I do? Yeah, like selling mid-market, $1 million, premium accounts to large businesses with high margins and growth profile is super attractive. That's what you do. But, if that's not where you come from, that's not what and you don't want to have to wait 10 years to try to pivot completely into that space. Like, just keep doing what you're doing really well. And if you're getting a 7 or 8x multiple on your margin, but you're able to grow 4, 5, 6 times as much in that same time period, who cares, right? Versus the person that gets a 12 or 13x, their pro forma EBITDA margin, and they're 1/3 the size of you. Who cares? If you're profitable and you're growing fast and you know how to continue to do that, you're going to garner great results. Especially nowadays, I think growth is the most attractive piece because a lot of the large buyers have had a harder time growing in the softening market when they're that big. And retention is what retention is. And you're not seeing the premium growth year over year that you did in a hard market. Organic growth matters a ton. So if you've proven that you can do that in any niche, someone's going to really pay a premium for that.
That's a great point. And are you seeing that because organic growth really is not centralized in the really large brokers because so many of them have been bolt-on acquisitions?
I think that there are definitely larger public and private backed agencies that are exceeding average rates in terms of pace of growth year over year. Those that aren't just don't have the production capacity that is necessary. If you're 600 or 700 million in revenue, you need to bring on hundreds of producers a year. Like the math just doesn't work if you don't. And I don't think that a lot of the businesses are set up to do that. And so in a hardening market, it's easier to continue to grow organically because you're running with inflation and your premiums are going up. But if your premiums are stagnant or growing at 2 to 3%, you need a huge production force. And I think a lot of the agencies out there that are that size, they don't have enough producers on the team. So if they are looking to acquire an agency that has production capacity and has shown a history of growing fast, they'll overpay for that. They'll pay outsized multiples for that type of business because they know that after the acquisition will be super accretive.
Okay, this might be a bit of a random question, but it's potentially on par with this, right? Let's say, yeah, obviously we know that perpetuation through a family member, son, daughter, whatever that might be, niece, nephew is super, super common. That person takes over that book. Let's say that book was steady, but not really growing very much. And this person comes in, young, hungry, looking to jumpstart this thing. What is the first piece of advice that you give them?
Two things: doing an assessment of what's worked and what hasn't worked is the first step. If you haven't been in the driver's seat, you haven't been able to make all the decisions, it's really good to get a first level assessment of like what has worked, what should we continue to invest in and double down on, and what things should we just avoid and we should just kick the can on. Second thing is, I think in any small business of any size and that wants to grow north of 10% year over year, right? You're going to have fires, you're going to have problems, you're going to have issues that pop up. It's figuring out which ones are we okay letting burn and which ones will we never let burn. And I think I've always looked at it as top of the funnel opportunities, lead gen, business development, networking, marketing, sales. I'll never let those areas burn. I will always provide enough attention and be very intentional about our strategy and try to stay ahead of the need. Not to say that service and processing and claim management and all the other things aren't as important in terms of a day-to-day function, because a lot of agencies, 99% of their revenue comes from existing clients. But I don't think I ever want to see the problem on the scoreboard as we don't have enough sales, we're shrinking because we're not producing enough. Because that feels like stagnation, and I don't think that from a value perspective that's something anyone wants. So yeah, I would say for a new person moving into that chair, like pushing your foot hard down on the growth pedal, and not worrying as much about some of the other problems that might exist from that. I don't know, it worked. It's worked for me.
Yeah, no, it makes sense. You figure like start with what you got, instead of trying to just start this from scratch, because you already do have a pretty big asset that you've inherited, or bought, or whatever that might be. But one quick area I want to touch on is, I always kind of like to see, where have you seen, carriers are obviously a huge part of this whole I mean, carriers are writing the insurance, right? Like that is they're manufacturing the product. And, for the things that you've talked about, where can carriers, what's the opportunity, and like where have you seen carriers really help support this growth process?
Yeah, when we were growing the agency, I think one area that we were put off on was the insurance companies that came in on a quarterly basis with a packet that was printed out that said, how much business we had given them, where our premium levels were, and what their target lines of business that they were looking to grow in was. Because a couple of reasons. One, we already had all that information. And two, that time was really, really valuable. And we set to it could have been an email. So carriers that are looking to invest in the relationship and come in the door questioning, what does that look like? Not so dissimilar to going into a center of influence meeting and saying, what do you need? What pain points do you have? What would you do more of today if you had more time and bandwidth? What would you kill tomorrow if you could? What would you outsource? What problems are you having in terms of team and HR? Those questions, whether you can answer them and help the person or not, should be asked. And if carriers who came in asked those questions, we would actually get into like an intimate conversation about what's working, what's not working. And then they can actually go back and say, well, we can't help with those things, but maybe this one item that they mentioned, we can actually work on that. So I think at an elementary level, going in, questioning what can we do outside of just like helping you with your underwriter relationship and providing education on our rates and product lines, like what can we actually do to help your business? That question should be asked nonstop. In terms of what I've seen work really well is carriers who are looking to invest in agencies that are growing and working with them, because it's got to be a two-way street. Can't offer the same thing for every single agency out there. If someone's shrinking with you, you're not going to be as investing in their relationship. But people who come to the table, carriers that come to the table and say, hey, what's going to help you grow more? Well, we need more producers, but producers are expensive. We bring on 4 this year and grow more with you, but we can't afford that. We can only work so much with our lines of credit and our banks and our current cash flow, yada, yada. Cool. Maybe we could talk about a producer funding program. There's some forgiveness if you grow X amount. Or, hey, there's a couple agencies local to us that we'd love to kind of tuck in and acquire, but we don't have the capital, and banks aren't allowing us for whatever reason. Maybe that's something that you guys could help us with to finance those acquisitions. And maybe there's a forgiveness piece if we roll a certain amount of business with you. Those are the creative business building relationships that I think would go a long way. And you can't do that with everyone, but someone who's loyal, investing in you, that's something that I think would be interesting.
Do you see that happening right now?
I'm not in it, so I can't say that I'm, firsthand seeing that, but I have heard from agency owner friends as well as people in the industry that does exist from multiple carriers nationally and some regional. They have the ability to be flexible. They have the ability to invest in those relationships. And it might not be like a program that they're putting a PDF out and saying, hey, this is something that we do. But I think that carriers want to grow, and if it's going to help them grow and they're confident in the relationship and the ability for that agency to pay them back through premium growth that's profitable, why wouldn't they?
I tend to agree. And I think one of the bigger misconceptions is that carriers are just kind of focused purely. Carriers have put millions of dollars into supporting the agency channel, especially if that's one of their primary channels. And I think if you asked them, they would say, absolutely, we want to put this where it's going to have the highest ROI, which is going to be the biggest win-win. And I think asking more of those questions and getting more of those answers, I think, are critical. So I just find that's super interesting. Matt, last question that I have for you to kind of bring this to a wrap is, if you could have a conversation with the Matt that was just starting out in this industry, what would that conversation be? What advice would you give him?
Twofold. First, the thing that I think has worked the most for me, the best for me, has been just being honest and truthful and intentional about being kind to everyone that I've connected with and trying to help other people with what their problems and challenges are, to continue to do that, because I think long-term brand reputation is so meaningful now. And it continues to benefit me in ways that I never did that to create the results I'm creating now. I just did it because it was the right thing to do. So not taking shortcuts, ends don't justify the means. There are ways to win with people without breaking your moral or ethical codes. I think those are things that I would definitely reinforce, and I'm glad I didn't. I'm glad I took that advice in essence. I think the other piece of it would be to continue to risk intelligently, and be bold with your decisions. I think a lot of the things that I've done have worked. There's no reason why, if I were more bold and even more aggressive, they wouldn't. The only caveat to that is that I have an absolute wonderful relationship with my kids, and there is a constant balance of risk reward in terms of how much do I need to expand professionally to fill that cup, while also not sacrificing the moments that matter most in my life, which is with my wife and my kids. And I think I've been able to accomplish that and kind of find a really nice balance. Achieving that billionaire status isn't important to me. It's to achieve and maximize results professionally, have a ton of fun doing what I'm doing, help as many people as possible, work with amazing people on challenges that are worth my time. That will create great financial outcomes, and it allows me to have a meaningful relationship and have a ton of hours and intentional time with my family.
And honestly, so much of what you just said goes back to what you said earlier, right? Long-term games with long-term people. It is kind of amazing when you do all those things, how much that comes around. I think that's such good advice for sure. Matt, this has been awesome. Knew I was going to enjoy this. I definitely did. I appreciate you coming on today.
Yeah, thanks for having me, Cal. This has been fun.